Welcome to TradeTheMBI.com. This is John. This report is for the 29th. I hope to be a little bit more composed today. Doesn't change how I feel. It's just this way we can get you the information that you need. Because we're about to enter a new world here. In the U.S., obviously, as things get finalized with cabinet for a new administration and some of the deadlines pass about any of the uncertainty with recount activities and that, and I think as that abates, I think we're going to see a little recovery back. But we had to fill back in some positive extremes I showed the other day. That's been done. So there's no real impending pressure on the market at this particular point. You're going to start having people who need to catch yield jump into that market in order to catch up to this kind of move that maybe caught them off guard. That typically happens, and that's what chases the move further. The reality is that some of the European action could have an impact because there's a balance between the euro continuing to fade and or other currencies in relation to how competitive U.S. goods are. But the idea that you're talking about the majority of spending and the focus being on infrastructure and within America, that dynamic is pretty strong. Now, obviously, more of the S&P is geared towards a lot of international activity, but there's going to be some interesting developments. I think Nasdaq is going to see a lot more particular stocks have some issues because, as I pointed out, I mean, it's clear that it looks like that Amazon and some of these large internet providers that really dominate the Nasdaq are going to be under a lot of scrutiny under the new administration, and that may cause a little jitters because it's not about what happens, it's about the uncertainty of what may happen. And that's the more important aspect of it. And you can see Nasdaq is just remaining flat. And it's now actually behind. It's really kind of ironic given that the Nasdaq was leading with the expectation of HRC win. And as soon as that started to come into doubt, the Nasdaq took it the hardest. And obviously the Dow, which was lagging, complete flip around because now you're looking at the solid aspects of growth. But you can see that when we do have a retrace, there's some significant returns that have to take place back into this move, and not unsurprising. And looking at the euro, see it's pretty flat right here around 106, and that's actually pretty decent. It's holding up support to the previous years, so people have to be thrilled with that, at least from the Fed standpoint, not so much from the euro. They're facing their own problems with the Italy vote that comes up here next week, and I can tell you, being in the heart of Renzi country in Florence, the no side against him is pretty dramatic, and I think that is reflected exactly in what you saw in the U.S. In certain particular areas, and that's unusual for this area because, frankly, there's just a lot of socialists and communists who are in this area, and to see such a strong support for the no side is going to be a significant turning point for the EU in general. And how does that impact us on the market? Well, it has a significant impact. Bonds, any bounce here is relatively short-lived. Now, there is a huge expectation that the Fed rate is going to go up in that. I'm not convinced of that entirely, and that could spark a rally, a significant rally, if the Fed in this December setup doesn't raise rates. Because at the end of the day, we still, while we're talking about potential hype of things, it hasn't materialized. It's not a real thing. It's just something that's been talked about as far as the changes that are going to take place in the new administration. So let's not jump the gun, or as we say, jump the shark. Oil, we've talked about that enough times to know that it's not really going to have too much of an impact. Gold's just completely oversold, and we can see the turnaround in short-term buys, but any pop here is going to be short-lived and has to retrace that bottom field again. And here was the 5K. So we had talked about the positive extremes going all the way back right here, and lo and behold, that's exactly what we did. We came right to those lows, balanced off of them, and boom. And that's all the algo was looking for, is to accumulate at that particular spot, and it becomes rather clean seeing that. I'll be preparing indicators for next month to go out. Obviously, some of the updates I had expected got a little bit delayed simply because the deterioration in Amy's condition required just a lot of my time, and I wasn't going to sacrifice 1 minute with her. I hope you'll understand that. She really appreciated everyone here, and this was important for her that I was doing this at the same time as she was thinking of others and trying to make a better contribution for them in a practical way that was something that could sustain itself. So, a lovely sentiment on her part, as well as everyone here getting an opportunity to stay ahead of the market and use it for your own benefits as well. As always, though, trade well, and we will talk again later. I will continue to be posting on the Skype chat. Trade well.